G'day everyone, welcome to another 360 Partners video. Today we're going to briefly run through some year-end matters that are applicable to most small businesses. So let's get into those. So first off the rank, we've got the instant asset write-off, or otherwise known as temporary fully expensing measures, which from 6th of October last year, the deferred annual federal budget that happened at that time, the government introduced a measure so that assets acquired after that time within a typical small business up until 30 June 2022, so we've got another 12 months to go, that they can be fully expensed, fully deducted, which is obviously a huge tax benefit to small business compared to writing it off over a period of time or even under what was previously relatively generous pooling. So it's a great measure. We recommend you take full advantage of it. The only thing to keep in mind is there is still a restriction on cars and the car depreciation cost limit of just over 60,000. So just keep that in mind. It does depend somewhat on the assets you're buying. Second off the rank, we've got something that's pretty important, and that's accounting for the business stimulus measures that a lot of small businesses got last year. So some of them are obviously taxable, like JobKeeper. Some of them are not taxable, like Cash Flow Boost. And some of the state-based ones have a bit of variation. And certainly in Victoria, we had a few that were taxable. We've got more recently non-taxable. There's legislation on that. So just be very careful. You obviously don't want to be paying tax on income if you don't have to. One other important point to note with that, doesn't get a lot of airtime. If you have a trust that runs a business and receives some of those tax-free stimulus measures, and if your trust distributes tax-free income to a corporate beneficiary, you want to be really careful, because that corporate beneficiary, even though it doesn't pay company tax on that distribution element tax-free when it receives it, that tax-free element can get locked in the retained earnings, and the only way to get it out at a later stage is an unfranked dividend, which obviously undermines the whole idea of tax-free income. So there are some strategies to deal with that, potentially reserving that part of the distribution at that trust level for a later stage. You need to look at your deed. You need to speak to your accountant and really give that some thought, but don't get caught out and paying tax on income where you don't need to, because in the extreme, Cash Flow Boost was 100,000, and if a lot of that went to a corporate beneficiary, you could end up paying tens of thousands in tax at a later stage that was completely avoidable. Next, we've got recommendation you pay super contributions if possible before 30 June. Bring that deduction forward to this financial year. Just on that, the superannuation guarantee rate, compulsory for employers, goes from 9.5% to 10% on the 1st of July. Employers are going to need to give some thought in that time as to whether they are going to effectively give their employees a pay rise of 0.5%, or whether they're going to reduce the take-home pay. The answer to that question on a legal basis depends on the employment contract and whether the employer and the remuneration was on a total remuneration basis. So, I mean, obviously it'll fall back to that. Obviously, a lot of employers that have the choice could still consider giving their employees a 0.5% pay rise. You certainly have to get your single touch payroll reporting locked in by the middle of July. You also, if you're one of those businesses operating in industry where you have taxable payments annual reports, or TPARs, you need to, for your contractors, you need to get those lodged by the end of August. Most good accounting software can deal with that pretty well these days if you put the data in correctly, but it needs to be done. Other thing we recommend, small business, well, companies in this case, you need to make sure your franking account balances are well managed at the moment. Certainly if you've got Division 7A debit loans, you may need to look at those before 30 June, determine minimum repayments or determine any other strategies, and make sure you've got sufficient company franking credits to pay any dividends needed. That may require you looking at the March BAS PAYG instalment. So have a good look at your Div 7A loans. Trust resolutions need to be done by 30 June. That's obviously a feature as of the last 8 years. There is no longer any administrative concession on that, so you've got to make some decisions. In making those, you can obviously look at the current year situation, but you also need to take into account if you have any CGT capital gains made this year and want to look at the CGT concessions. You just want to be careful that you've got enough distribution going to maintain significant individual status, particularly looking at things like retirement exemption, 15-year exemption, that you need to have someone for that whole time. So be really careful with your trust distributions, because you do need to meet those requirements. Finally, we recommend that most small businesses set themselves at least one goal for the 2022 financial year. We're effectively at the start of the year setting at least one goal for the year ahead. Probably a pretty good idea. Potentially one other personal goal as well, like you want to save a certain amount of money. But we recommend that you at least consider setting one goal and working towards it for the year ahead. Hopefully that's been helpful to you. If you've got any questions, by all means post them on our Facebook. We'll see you next time.